This is the American dream. This is just a beautiful play on getting a car of your dreams and being able to help it save you money on taxes. What's up, family? Welcome back to another episode of Tax-Free Living. And today, I'm gonna be teaching you all how I wrote off my dream car last year and paid $0 in taxes. That's right, last year I bought a new Lamborghini Urus, right? And getting this car helped me save tremendously on taxes, and it actually helped me live tax-free in 2022. So I'm gonna give you all the game, all the sauce on that in today's episode. Before we get into that, hit that like button, hit that subscribe button, share it with a friend. Without further ado, let's get into it. So as I mentioned before, guys, it's actually a crazy story. So last year, it was me and two of my friends. We rented out a house in San Diego, California, and it was me and two CPAs, right? So we were like going over tax strategies, and we were like looking at our own taxes, right? And we, like, by the end of the mastermind, we came to the conclusion, like, yo, if we want to like not pay taxes this year, we got to buy a car. And we all decided to buy Lamborghini Uruses to save hundreds of thousands of dollars in taxes. During this episode, I'm gonna explain exactly and break it down step by step, but it was amazing. We all like closed on our Lamborghinis in December. I saved $120,000 in tax and dollar for dollar tax savings, which allowed me not to pay taxes in 2022. Before we break down that strategy, we need to understand how auto deductions work. In 2023, there are two ways to deduct your vehicles. There is the actual method, and then there is the mileage method. Okay, so I'm gonna break both of these down so that you can understand what's best for your situation. Okay, so let's talk about the mileage method. What the IRS says with the mileage method is we're gonna let you deduct all of the business miles that you drive in any given year. In 2023, if you drove, let's say you drove 10,000 business miles. And you say you bought a vehicle, you use it for business, right? You put 10,000 miles in the vehicle and all the miles were business miles. Well, you would take that 10,000 and you will multiply it by the mileage rate for that given year. And the mileage rate for 2023 is 65.5 cents. So you would take 10,000 times 0.655, which would give you about a $6,550 tax deduction for that year. You got a $6,500 write-off for driving your car. You don't have to buy a new vehicle. You can use a personal vehicle that you already have, and you can just use that vehicle for business. And then you simply would just track the business miles using QuickBooks Mileage Tracker, Mileage IQ, all these apps and different softwares. You would track the miles, multiply by the mileage rate. In this case, 10,000 times 0.655, you would have a $6,500 tax deduction for your vehicle, which is decent, right? What the mileage method says is you can take the miles, but you can't take anything else. And let me give you all a lesson, right? So the mileage method is easy. When it comes to the IRS, anytime they give you an easy option to do something, that means they're basically gonna cheat you out of tax deductions, right? So if they give you an easy way and a hard way, the easy way is gonna be less beneficial for you tax-wise. It might be easy for you to compute, but it's probably gonna be less beneficial for you. So that's the mileage method, quick and simple. The actual method is different. It says, hey, we're not gonna allow you to deduct your business miles driven, but we will allow you to deduct everything else. Some of these deductions include your gas, interest on your car note, lease payment if you lease. You can deduct parking, you can deduct any repairs on the vehicle, oil changes, maintenance. You can deduct car washes and car details, car insurance, right? You can deduct your licensing fees, and you get this amazing deduction called depreciation. And for those of you all that don't know what depreciation is when the value of something decreases over time. We all know that an automobile is a depreciating asset. The IRS knows that too. So what the IRS says is, hey, we're gonna give you a tax deduction today for your car losing value in the future. And how much is that tax deduction? Well, in 2022, we were allowed to write off 100% of the cost of the vehicle in the year that we purchased it. 100%. In 2023, it decreased to 80%, but that is still a lot of money. So, for example, if you were to go finance a Cadillac Escalade, which is a $100,000 vehicle, right? You get a $80,000 tax deduction the year that you financed it, even if you put no money down. You get to deduct depreciation plus all the other expenses that I just brought up, right? Interest on your car note, car insurance, gas, repairs, maintenance, car washes, oil changes, parking, car insurance, all these expenses, plus 80% of the value of the vehicle. So here's what I did, right? Here's what I did. So last year in 2022, I looked at my net income from all my business ventures, and we had about $200,000 in net income. And I'm like, yo, on this net income, I'm gonna have to pay federal taxes, and I'm gonna have to pay state taxes. And I live in California, right? I was living in California last year. I'm like, yo, that's gonna be about a 40% tax bracket, right? So I'm gonna be looking at, geez, what, $80,000 in taxes? No way. No way, Jose. I cannot be the CPA talking about living tax-free and I'm cutting the check for $80,000 in taxes. So what I did was, I was like, hey, if I can find a vehicle that costs about $200,000 and I find a way to leverage it in my business this year, the IRS will give me a 100% tax deduction for me getting this vehicle. Again, even if I just finance it. Right? So me and my friends were in this mansion in San Diego, and we're like on Car Gurus, on Car Genius, CarMax, all the car websites, and I'm looking for Lamborghinis. And I just so happened to find this beautiful blue 2020 Lamborghini Urus, and the price tag was about $220,000. So I called him up, talked to the dealer, got things situated over the next 2 days, and the down payment was only $40,000. So what I did is I actually used my Amex card for the down payment. Why did I do that? Because my Amex card is a business card and I'm able to get points for any money that was spent on that card. So I think I got 2% on that. So I got $1,000 in points, right? So I put $40,000 in the car. I got the vehicle. I got the vehicle December 1st, I believe. I shot 30 days worth of content in front of this vehicle, right? We shot ads, we shot content, all this stuff in the vehicle so that I can prove to the IRS that I was using it for business use. Here's why I love using cars in my ads. When you get a car, or you get a business vehicle, and you use the vehicle for ads in your business, if you ever get audited, you can have your ads manager pull the ad, show the car in the ad, and then you can show exactly how much money this ad brought into your business. So not only is the ad like photo documentation of you using the car for business, but you actually can prove how much money the ad brought into your business, AKA proving how much money the business vehicle brought into your business. So it is a documentation proof and it is audit proof at the same time, right? So I got this vehicle, shot content, got my business use. And in 2022, the depreciation was 100%. So I got a $220,000 tax deduction. Think about this. If my net income was $200,000 and my deduction was $220,000, that means my business took a $20,000 loss, right? So not only did I wipe out that $80,000 tax bill that I was gonna have, I'm actually able to carry forward $20,000 of losses into this year, into 2023. So not only did the car help me live tax-free in 2022, it's gonna help me save on taxes in 2023 as well. Guys, this is just a beautiful play on getting a car of your dreams and being able to help it save you money on taxes. So yeah, I put $40,000 down payment on the car, but it saved me $80,000 in taxes. So I made a $40,000 profit getting the car of my dreams. This is the American dream, and if you wanna pay less tax, simply change the facts. And with that, guys, we're out. Hit that like button, hit that subscribe button, and share this with a friend. And I'll see you all on the next episode. Peace.